Welcome back to Investing Talk Podcast.
Today we're looking at Rigetti Computing. The big question is it a good time to buy now?
We want to hear from you. Subscribe, like, and comment to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. For us to understand Rigetti, we really have to see them as one of the foundational players, a pioneer in quantum processors. They're not just building the hardware like their Novera QPU systems, but also focusing on the delivery. That's quantum computing as a service, QCS.
Right, selling access.
Yeah.
Access to the future, basically.
Exactly, access to a whole new type of calculation.
And that future, well, it seems to have really juiced the stock market lately. Let's maybe unpack this apparent contradiction right away. Because back in September 2025, Rigetti stock just exploded. An astonishing 84% gain. That kind of jump suggests the market thinks a massive breakthrough is, like, right around the corner. But how do we square that excitement with the, frankly, tough financials of a company that's still pre-commercialization?
That is the absolute core tension here. And you're right, that September surge, it wasn't just, random retail hype. It seems to have been driven by really serious, tangible validation. The biggest piece was them securing a 3-year contract with the U.S. Air Force Research Laboratory for advanced quantum R&D.
Okay, so that's major government trust, high-level institutional backing.
Precisely. But it wasn't only government work, and that's key.
Ah, right. There were commercial deals, too.
Yes. They also announced purchase orders for those Novera QPU systems from actual commercial clients. One was an unidentified Asian tech manufacturer, the other a California AI startup.
Okay, so defense and cutting-edge commercial AI. That combination, that's potent. And no wonder it drove the stock up another, 16.5% on its own.
Exactly. It shows breadth. And what's really interesting here is understanding what that Novera QPU actually is. It's Rigetti's 84-qubit system. Now, qubit count is just one metric, sure, but that Air Force deal specifically, it signals real confidence in the system's fidelity and, crucially, its accessibility through their QCIS cloud platform.
Making it easier for researchers, for companies, to actually use quantum power without building their own massive, expensive hardware. They're like the infrastructure play.
That's it. They're building the quantum cloud.
Okay, so the contracts definitely show technical validation. Big check mark there. But validation alone doesn't pay the bills, right? Let's look at the actual cash flow situation, because this is where I think a skeptical investor really has to hit pause.
Absolutely. And we have to view Rigetti through the right lens here. This isn't a mature, profitable company. It's a hyper-growth, capital-intensive startup in a brand new field. So their 2024 revenue, for example, came in at $10.79 million.
Okay.
And here's the kicker, like you said, that number was actually down 10.14% compared to 2023.
Wait, hang on. Revenue dropped 10% year over year, but the stock soared 84% just a few months later. And the losses. The net loss for 2024 was huge, almost $201 million. Even if we look at the trailing 12 months, the TTM figures, revenue is only about $7.9 million against a net loss of over $164 million.
Steep numbers, no question.
So, how do we, as informed observers, possibly justify the strong buy consensus we're seeing from analysts with financials that look, frankly, pretty disastrous on the surface?
Well, we justify it by looking at the sheer scale of the speculation. The market isn't valuing Rigetti based on today's $8 million in revenue. It's valuing Rigetti based on the potential total addressable market for quantum computing maybe 5-10 years down the line.
The TAM argument.
Right. If quantum computing really does become the multi-trillion-dollar market, some futurist project, well, then burning $164 million a year right now. That's just the cost of entry, the R&D investment needed to capture a slice of that future pie.
Which brings up the valuation itself. The source material mentioned a market cap of, $14.35 billion?
Yeah, around there.
That is an extreme multiple compared to $7.9 million in trailing revenue. Is this just, irrational exuberance?
Yeah.
Hype? Or is there something more concrete holding up that speculative floor?
I think the floor, such as it is based on two main things. The competitive landscape, who else is really doing this at scale? And crucially, their liquidity position. While that valuation is definitely way out there, highly speculative, Rigetti has managed to secure enough cash, enough liquidity, and they don't have a major debt burden hanging over them.
Okay, so no imminent bankruptcy risk. They have runway.
Exactly. They have runway to execute on those critical R&D contracts we talked about. For the analysts putting out those buy ratings, the focus isn't the current loss, it's can the company survive and deliver on its path to future commercial scale? They're essentially betting that the execution risk pays off.
So the immediate spotlight is squarely on execution.
Yeah.
Can they prove it? Which means we need to look forward, because the next few months seem absolutely packed with potential catalysts. These could either cement that huge valuation or potentially cause it to crumble, couldn't they?
Absolutely. The number one near-term driver is the upcoming Q3 2025 earnings report. It's scheduled for November 5th. Now, investors won't be looking for profit there. Not yet. They'll be looking for evidence of progress and forward guidance.
Like, specifically, what are they looking for?
How are those new Novera system orders coming along? Are they hitting the milestones on that vital Air Force contract? That's what matters right now. Any positive updates there could sustain momentum.
And beyond just the earnings report itself.
Potential new federal awards are always a possibility, or expansions of existing ones.
Yeah.
And new commercial partnerships would be huge price movers.
And this is where I guess the speculative buzz comes in again. We have to treat it carefully, but it's out there. These rumors circulating that the unnamed Asian tech manufacturer who ordered a Novera system, the rumor is it's a major global chip maker.
Right. And if that rumor turns out to be true, well, that signals something much bigger than just academic R&D. It could mean potential deployment at real commercial scale, maybe within supply chains or advanced manufacturing. That would be a game changer, moving Rigetti much closer to actual commercial application.
And there's also chatter about government work expanding, right? Beyond just the Air Force. Maybe other defense or intelligence agencies getting involved.
That's the other speculation floating around, yes. Yeah. Less concrete, perhaps, but definitely part of the narrative driving interest.
And then for people tracking the big money, the institutional flows, there are specific dates to keep an eye on.
Definitely. Look for activity around December 20th. That's ETF rebalancing day. And then again around January 15th, when new institutional buy filings often come out.
Okay, can you quickly explain for someone listening why ETF rebalancing day matters for a stock like Rigetti?
Sure. So given Rigetti's huge run-up in market cap expansion, it's probably now included in or has a bigger weighting in various benchmark indices that ETFs track. On rebalancing day, those big index funds have to buy or sell shares to match the updated index composition and weighting. It's often forced buying or selling.
So it can create significant demand or supply regardless of the news that day, just based on index mechanics.
Exactly. It can inject serious volatility in trading volume. And if the overall bullish story holds up through the November earnings, that rebalancing activity could actually support the price momentum.
Interesting. Okay, let's switch gears then. Let's look at the technical picture, the charts. Because after that massive September rally, the stock's currently consolidating, trading between, $41.68 and $44.52.
Right, finding a near-term range. But look at that 52-week range, from $1.06 at the low all the way up to $58.15 at the high.
Wow, that just screams volatility, doesn't it?
Absolutely extreme volatility. But the underlying momentum, technically speaking, is clearly bullish right now. The stock is trading well above both its 50-day and its 200-day moving averages. That's a classic technical strength signal.
Okay, key support levels holding.
Yes, but probably the most important technical number here for traders and for understanding risk is the beta. It's 1.61.
And what does that 1.61 beta mean in practical terms for an average investor watching this?
It means the stock is significantly more volatile than the overall market. It's highly correlated, so it tends to move in the same direction as the S&P 500, let's say. But its moves are magnified. So simplifying a bit, if the S&P moves up 1%, you might expect Rigetti statistically to move up around 1.61%.
Okay, amplified gains.
But, and this is a crucial part, the same applies on the downside. If the market tanks 10%, Rigetti is statistically likely to fall over 16%. It cuts both ways, sharply.
High risk, high reward defined right there.
Right.
So where do the technical forecasts see it going, assuming things go well?
The price forecasts suggest a sort of feasible bullish range, maybe targeting $44 on the low end up to $57 through, say, January 2026.
And the blue sky scenario?
If those November earnings really surprise to the upside, or if we get solid confirmation of that rumored major chip client, then yeah, maybe the target could stretch up towards $62, possible, but needs strong news flow.
Okay, massive potential upside clearly reflected in that valuation.
Right.
But we absolutely have to talk about what could derail this whole bullish story.
Right.
Because risk management is everything with these kinds of speculative plays.
Couldn't agree more. The biggest risk factor remains the core business reality. Rigetti is not profitable and needs ongoing external funding until it achieves commercial scale. It's burning cash. Any significant delays in their very complex R&D pipeline, or worse, a cancellation or major cutback on a key contract like the Air Force One that presents immediate serious execution risk. The market reaction would likely be brutal.
And that high beta we just talked about, the 1.61, that makes it incredibly vulnerable to macro risks too, doesn't it?
Hugely vulnerable. If the Federal Reserve suddenly hikes interest rates more than expected, or if we just get a general wave of risk-off sentiment in the market.
Meaning investors get scared and pull money out of speculative tech.
Exactly. In that scenario, high beta stocks like Rigetti tend to suffer disproportionately. They fall faster and harder than the broader market. It's definitely a risk-on kind of asset.
A high tide stock that sinks fastest when the tide goes out. Makes sense.
So, pulling all this together, our analysis concludes with an overall bullish rating, let's say 8.5 out of 10. Why? Because the company has secured that fundamental, high-profile government validation. The technical momentum looks sustained for now. And crucially, we see numerous specific potential catalysts, especially those Q3 earnings lined up over the next 3 months.
Okay, so bottom line, what does this all mean for you, the listener? Well, Rigetti looks potentially attractive for a couple of different profiles. Short-term traders might look to play the expected volatility around that November earnings report. High risk, but potential for quick moves. But it also represents a compelling, though clearly high-risk option for long-term investors. People aiming to capture the really big structural growth potential of quantum computing as it starts, maybe just starts, to transition from pure R&D labs into validated national and commercial infrastructure.
And the final provocative question we'll leave you with to think about is this. If this recent wave of government validation is truly the inflection point we've been waiting for in quantum, at what point does Wall Street stop valuing Rigetti like a speculative, moonshot tech startup and start pricing it as potentially essential national infrastructure? And how quickly could that fundamental re-rating happen in 2026 if the execution continues?